Hello learner, welcome to Manifested e-learning forum. My name is Emlyn Ngwiri. I'll be taking you through equity investment analysis, and the topic that we're looking at is technical analysis. In today's lesson, we are going to look at the following. So we are going to look at, the first thing we're going to look at is primary trend. Then we will move on and look at secondary trend, like that. Then we will move on to minor movements, like that. And these are the principles that underlay the Dow theory: primary trend, secondary trend, and minor movements. Then we will look at the interpretation of trend lines. Interpretation of trend lines, like that. Now here specifically we'll look at uptrend, that. Then we will look at the downtrend and no trend. Downtrend, trend, and no trend, like that. Then we will move ahead and look at the prediction of the market using the Dow theory. Prediction of the market using Dow theory. That. And then we move ahead, we'll be looking specifically at the Dow Jones Industrial Average and the Dow Jones Transportation Average there. Moving on, we will look at the support and resistance level. Support and resistance levels, like that, and try to explain the reasoning behind the support and resistance levels. Then we move ahead and look at chart patterns. Yeah. Then we'll move ahead and also look at the reversal patterns. Reversal patterns. And finally, we will look at the trend lines. Trend lines, like that. Now, this is what we will look at today. And we start off by looking at the primary trends. Primary trends. Yeah. Now, the primary trends, as explained in lesson 1, we had said that the Dow Jones, the Dow theory is governed by 3 trends: the primary trend, the secondary trend, and the minor movements. And I will be able to demonstrate the primary trend as follows. So we will be able to draw how the primary trend looks like and we'll try and superimpose the primary trend, secondary trend, and the minor movements on one graph, like that. So here we have increasing, like that, the prices. Here we have time, like that. So if we have the primary movements move in form of trade. So this is the security price that is moving like so. For example, it's moving like that upward direction, bullish trend. This is now moving up. Bullish means that it's moving up. Bearish means that it's moving down, like that. So trying to explain the primary trend, it is in form of waves, rather tides, like that. So that is an indication of a bullish trend based on the primary trend. How different is that bullish trend from the primary trend from the secondary trend? Now the secondary trend is a movement in smaller patterns, like that. So it just follows the primary trend, but now in smaller, what we can be able to call them as smaller waves, like that. superimposed on this, we can be able to explain the minor movements. So the minor movements now follow the trend, the general trend, but now in smaller, what you can say, smaller movements. That. So you're moving like that. That. So the primary trend is the bigger wave that moves like that. I can be able to demonstrate right just below this. This is the main graph over here that we're looking at. Wait, you have superimposing, and you have the primary, secondary, and tertiary trends superimposed on each other. But now, trying to explain the primary trend, this is still prices, like that. Here is time, like that. So we can be able to just explain now the primary trend, because that is the major topic that we've actually talked about over here. So if the security price is moving like that, so you can say that this represents primary trends. You can say this is A, primary trends, like that. That is what we've looked at there. B, you can say this is A, now this is B. Secondary trends. So the secondary trends move in smaller prices, time. So if you have now, we can be able to use bearish trend like that. This is bearish trend like that. So we can be able to say now they're moving in small waves like that. This is what we're saying is a secondary trend. It's much smaller as compared to this one. You can see this one is much bigger there. This one is much smaller there. See, so you can say you can use this B, secondary trend line, but here is primary trend line. So you can be able to see it like that, and this is the primary trends like that. Now we can be able to now draw finally the minor movements. Prices, you can put this right here. We have prices. Here we have time. So we can be able to say, if we don't have a trend, we can give another description over here. If the prices are moving somewhat like that, over here we can have very small movements like that, which are indicative of a minor movement. So here we have C, minor movements over here, and we have minor movement line. C, minor movement line, like that. Now, having looked at the primary trend, now here we have the primary trend. This is the major line. Here is the primary trend like that, and we are saying that this is now the big tide over here. This is the wave, and this is the minor movement. We can move on to interpretation of the trend line. So you've looked at the primary trend, the secondary trend, and the minor movements there. Now we move on to look at the interpretation of trend lines there. So let's look at that very quickly. We have interpretation of trend lines. Interpretation of trend lines. Interpretation of trend lines. Now here, more specifically, we had said an uptrend, a downtrend, and a no trend over here. And so we are saying in an uptrend, we can show it like this. So if we have prices moving like that, this is prices, this is time here, we can be able to draw a line like that. As well, we can be able to also draw a line like that, and this is an uptrend, bullish trend, like that. Now this is an uptrend, so once you see security prices moving in that direction, generally they, of course, you don't expect them to move like this. In practice, you might expect them to move somewhat like that, not very straightforward lines like that. This should be indicative of an uptrend like that. However, so you can say this is an uptrend, A here, uptrend like that. B, we have downtrend, downtrend like that, and we draw a downtrend like so. This is prices, this is time. So a downtrend moves now the opposite of, and then we can be able to probably draw what we can call a channel like that. So that one doesn't, not very perfect. It's good to be perfect sometimes, not all the time, but you can try that. So that is a downtrend, what we can call bearish trend there. Now a no trend is where the market moves in a fashion that does not indicate, or in a way that does not provide any indication of a trend. And I will demonstrate that shortly. Where we have like so, we can use this to make sure at least we are accurate, almost accurate. Time, like that. This is prices. That. So we're saying if trend moves like that, then we don't have any movement in any particular direction. It's neither is it moving in a bullish trend, neither is it moving in a bearish trend over here. So you can say here, C, no trend, like that. Now, having looked at the interpretation of trend lines there, we move on and look at the prediction of the market using the Dow theory. We can look at the Dow Jones Industrial Average and the Dow Jones Transportation Average right here. So this, we've actually done the uptrend, downtrend, and no trend there. So moving on, this Dow Jones Industrial Average, Dow Jones Transportation Average provide an indication of when to buy a security and when to sell a security. So the best way to demonstrate this prediction of the market is to use a graph. So I can use this part right here. Draw it like that. Not be very perfect, but at least I'm trying my best. Prices. Yeah. And here we have time moving like that. Probably that line may not be the best. Let me just redraw it again. Trying to consider that. Yeah, I think that's better. This is time. Yeah. Now, the Dow Jones Industrial Average is usually much higher. It has got generally higher prices as compared to the Dow Jones Transportation Average. Now, we can be able to just draw roughly how the Dow Jones, it's just like an indicator of when to buy securities and when to sell securities, like that. So we can say Dow Jones Industrial Average Index. Now we can have, probably can have something like, this is when to buy and when to sell. Probably it may not be the best. I can just rub somewhere here and maybe change it a bit. Like that. That. Yes, let's put it like that. Draw lines like that. Also like that. So if we can be able to just draw the Dow Jones transportation average right here, like so. So this should be somewhat like, should have been actually at the bottom part, yes, like that. Like that before, now it rises again like that, something like that. So they almost follow each other, the same fashion here. So this should indicate a sell signal, and here I'll be able to just draw somewhere like this, like that. This can be maybe I can do it like that, sorry, like that. Yes, this is Dow Jones Transportation Average there. Right here indicates right this point here indicates sell signal, and here as well sell signal, like that. Meaning what? Meaning that investors have an indication that the market is actually going to start moving down. That is what you need to understand. That this is a sell signal of where you sell the securities that you already have. Or if you're intending to purchase, you don't consider purchasing the security at that moment. But however, after a little while, after some period of time, remember this is time like that, after some time, what happens is that the Dow Jones Industrial Average and the Dow Jones Transportation Average provide an indication of when to buy and sell. At this point is where you should have a buy signal, right? That part over here, this part here, buy signal, buy signal, there. So these indicators provide some guide to investors as well as analysts when to buy securities and when to sell the securities. When to buy, you buy low, you sell high. You buy securities at a low price, at the lowest price possible, then you sell once the securities actually reached a very high price there. Now, the Dow Jones Industrial Average, there are times when you find that if the Dow Jones Industrial Average is moving down and the Dow Jones Transportation Average is moving up in the opposite direction, then there is no indication of any trend. So I need to probably highlight that in writing right here. So I can highlight that by saying that when the Dow Jones Industrial Average, or I can put it in full, I think the best thing is to put it in full like that. Dow Jones Industrial Average, Jones Industrial Average DJIA is rising and the Dow Jones transportation average is falling, rising, falling. There is no trend that exists there. So we are saying, if you have a hypothetical graph like this, you find the Dow Jones is falling like that, Dow Jones industrial average is falling, and the Dow Jones transportation average is rising like that, then there is no indication of a trend that exists there. So there you should not be able to infer anything, and you should be able to probably maybe hold on a bit so that the trend can be able to exist. However, when the DJIA and the Dow Jones transportation average, DJTA, are both rising, by the security or asset. When the contrary occurs, sell into brackets, do not buy the security or asset. There. This is just a simple summary of this diagram over here, like that. Now, having looked at the prediction of the market using the Dow theory, we can move on and look at the support and resistance levels. Support and resistance levels as used in technical analysis. Now here, probably I move on to this other side so that I can be able to draw a very nice graph over here that can be able to explain to us the support and the resistance levels. And the graph that I will draw over here will be indicative of when we as analysts or investors should consider buying once we see or identify such a trend. So we can be able to draw it like so. That price, time, that, and we can draw just something like, say, that. Can probably put it something like that. And probably this should rise a bit like that. So for us to understand the support and resistance level, we just need to know, just from the terms like that, we know that the support level is down there because it supports and prevents any further downward pressure movement there. So this is the support level, and this is the resistance level. You can say the support level supports any further downward movement level supports any further downward movement in security prices and restricts movement beyond that point. There, restricts movement. So we're saying the support level, so in some it exerts some downward pressure. It tries to prevent that further downward movement in security prices, and there, that is what we're saying is the support level. The resistance level is the opposite of this, and we can say that the resistance level prevents any further movement upwards of security prices, friends, any further movement of security prices beyond a specified level. There. So that is the support resistance level explanation right there. Now, the support and resistance level can provide an indication of trends as well. So if we have, since we're doing support and resistance level, I can use this space over here. If we have support and resistance levels moving like that, we can be able to say that this is a channel moving upwards there like that. And if we have support and resistance levels now, of course, moving like that, then we can see that that is in fact, a wedge. What you're saying is a wedge like that. So the prices are moving very erratic at the initial stages, but now as they come down to the most recent prices, it actually concentrates at one point there. So that's an indication that the security prices are actually moving down there. Now with that, we move on to now the chart patterns. With the understanding that we have done under support and resistance levels, we try and identify which chart patterns can be used to try and identify trends as used by technicians there. So we can have something right here. Chart patterns and the interpretation. Yeah. Chart patterns and interpretation, what we will be able to look at, we will first of all indicate a no trend, a bullish trend, and a bearish trend. That's what we need to understand. We may be repeating some of the items we've looked at, but that is what the technicians actually want us to do. They want us to understand what the principles behind the use of graphs and charts there. So we can have that and that here. So we can indicate that this is a no trend, a no trend there. And then B is a bullish trend. We can be able to draw how a bullish trend looks like. Right, just below that, we just draw a bullish trend. This is prices, time, like that. Prices, time. So we have now the same, rather, apologies, this is bullish trend. So we expect something like that. And then we can draw, this is B, bullish trend. There. C, we can say bearish trend, which is moving down. So we can just draw the graph right over here. Bearish trend. This is prices against time. So now we can draw something like that, where we have the security price or asset price moving down like that. So this is C, bearish trend. Bearish trend. Now, once we've looked at those trends like that, we cannot be able to interpret. Remember, it is chart patterns and interpretation. So here we cannot be able to have any interpretation. The interpretation here is a bullish trend, so we should be able to buy. Right over here, buy is the interpretation. Over here, sell, sell or do not buy. Do not buy is the interpretation right there. We can also move ahead and look at configuration or confirmation of a bullish trend. We can use now another graph here to just continue from this. Confirmation of a bullish trend, confirmation of a bearish trend, and no confirmation of a trend there. There, I can use that. I can still draw another one down here, so that all that will be left is for me to just indicate the trend there. So D, confirmation of can say confirmation of a bullish trend, So we have something that moves like that. Then we have like that. Then it moves up in that direction over here. So these are the security prices over here. The security price is moving like that. Then we have that kind of a channel where there is no trend, and then it moves up in that direction. That is confirmation of a bullish trend. Then E here is confirmation of a bearish trend. Where we are saying it was moving like this, then we have the channel existing like that, and then it moves back down in that direction there. Confirmation of a bearish trend. Yeah. Now, since we've already indicated a no trend over there, there is no need to try and draw a graph that indicates confirmation of a no trend. All we need to move on and look at is the reversal of a bullish trend, the reversal of a bearish trend. So let's look at how they look like. Here, have this graph drawn properly. Draw another one right here, just below it. This is price. I not indicated on these other ones over here. This is price still against time. This is also price against time. It's always good. As an analyst, you need to also always be complete in terms of whatever you're doing. Whether it's doing corporate finance, you're supposed to always be complete and incisive. So now we're just trying to see, now that is E, this is F, and we are saying confirmation of a reversal rather. We're looking at reversals. We've already done the confirmations. Reversal, sorry, of a bullish trend. So we have the security price moving down like that. We have no trend existing at that point, and then we find that the security price starts moving in that direction like that. So that is reversal of a bullish trend. It was moving down, then we had a no trend market right over here, and then it changed direction and said moving up like that. Now reversal of reversal of a bearish trend. Now this one will have a reversal of a bearish trend. EF. This is G, reversal of this is bullish trend, this is bearish trend. Bearish trend. So that means it's going to move the opposite like that. So security prices was moving like that. We had the channel existing or no trend existing there, then it came back and went back down like that. Reversal of it should be the other way around. Reversal of a bullish trend. Bullish means moving up. This is reversal of a bearish trend. Bearish. Apologies. This is bearish. Bearish trend. This is reversal of a bullish. This is moving up is always bullish, then it comes down like that. This is reversal of a bullish trend like that. So this is price. This is time. There. Moving on, we have a wedge. A wedge. And a wedge looks like so. This is still price. This is time. Now you have the security prices moving like so. You have the security prices moving like so, where you'll have it moving, narrowing down towards a point. Have it move in that direction over there as a wedge. Remember, a wedge is something that looks almost like that. So we find security prices being very erratic over here, but now concentrating towards my point there. That is what you're saying is my wedge. That's G, this is H, wedge. Now here we are saying that, especially when it's like this, we are saying that even if it is bearish like that, the security prices become less and less erratic over here. The interpretation can be that the security now is being less traded, is not being traded as much as possible. So that is what you're saying is a wedge there. Now, having looked at the chart patterns, now let's look at something else, and we look at reversal patterns there. So reversal patterns. Reversal patterns, apologies. Patterns. Now under reversal patterns, what we have, we look at head and shoulders. And shoulder patterns. There. Just use a graph here. the head and shoulders will just be like that. Then you have, this is price, time there. So you find these represent the head, the shoulders, sorry, shoulders. These ones, and this represents the head. So it can be an indication of either downtrend, or it can be an indication of a head of an uptrend, especially more so when you have the inverse head and shoulder patterns. So the inverse head and shoulder patterns will indicate an uptrend there. We can say inverse head and shoulder, inverse head and shoulder. So inverse head and shoulders, just very quickly. It's just the opposite of that. So you have like that. This is now, these are the shoulders, and that is the head, like that. So you can see that this is, the pattern is moving like that. So this one is going to be a bearish trend, or it's almost going to be a reversal. And what we had looked at before, reversal. So it's actually a downtrend, then it changed back, it moved and back up like that. Next one is a double top formation. Double top formation. Over here, what we can do, right in a problem, maybe a very not so big diagram here. This is price, time, price, time, like that. So double top formation, if you have a line like that, in that form, so you find the security prices, let me put it like so. So you find the security prices moving like that, then it has like that. You can be able to now demonstrate that here is actually a double top formation like that. So it's double top at the top like that. So we're seeing over here essentially we have the support component existing right there, so it can be able to just reinforce your decision that is going to be an uptrend there. So that's a double top formation there. Now to conclude this lesson, let's look at very briefly the trend lines. The trend lines are not any new to us right now in this topic review, because we've already looked at the Dow Jones Transportation Average and the Dow Jones Industrial Average. So let's very quickly look at trend lines. Trend lines there. So for trend lines, we just have the following. We just need to understand what each trend line indicates in terms of uptrends, downtrends, and like that. So if you find security prices moving like that, and the general trend line is moving like that, in the Dow Jones Industrial Average moving like that direction, that is a bullish trend, buy trend. That's when you're supposed to buy. Then if it's moving in the opposite direction, I can put it on that graph like that, and you're saying that the trend line is moving in that direction, and we say it is bearish trend, sell, security like that. Here we still have prices, and here we have time. That shows continuity in the line there. Having looked at the trend lines, now we can also try and have something like that. There is no indication of any trend line or any direction of the movement in security prices there. So what can we infer from that? We can infer nothing from that particular line. This particular line over here, we cannot be able to infer anything because there's nothing, there's no movement in any particular direction, either up or down. Having looked at that, we hope that you have enjoyed this lesson. We hope as well that you will be able to join us in our next lesson, where we will still continue looking at technical analysis. Thank you and God bless you.